Hello, happy Tuesday, and more importantly, happy Tax Tuesday, because that's what today is. Today is Tax Tuesday. And today we have a very exciting show all around taxes, how to optimize your business, how to optimize your tax situation, um, good strategies when forming your business. Can you write off health insurance? How can I take advantage of retirement accounts? All that stuff is fair game for today. And hello to everyone. It's nice to meet you. My name's Luke, and I'm a business advisor here at Collective. And Collective is your all in one financial back office platform. We'll set up your business, uh, form your S Corp, handle your payroll on an ongoing basis, handle your monthly bookkeeping on an ongoing basis, provide support, of course, throughout the year for tax questions and just business support. And then at the end of the year, we'll take care of your business tax return, of your S Corp tax return. So we pretty much handled the whole shebang. But today, we are running a session called Tax Tuesday. And let's go ahead and start the session. And feel free to ask any question you'd like, and I'll do my best to answer it. Now, before I get started, it's important to keep in mind that you should only consider this information. Don't consider this legal advice. It isn't. Don't consider this tax advice. The tax code is really complicated. Some of this stuff might not apply to you. It's a good idea to speak to a CPA or some sort of tax professional before you do anything for your business. All right, one question. Do you handle just taxes for small business if we are small? So we don't handle just the taxes. We're an all-in-one solution for people that need to be S Corps, people that need to set up an S Corp for your business. So you'd only want to go forward with Collective if you kind of wanted the whole shebang handled, from bookkeeping, payroll, and tax filing on down. But the good news about that, though, is when you have an S Corp, there's a lot of stuff you have to have anyway. You've got to have a payroll processor, to run your own payroll, because you're going to be on a paycheck. You have to have a bookkeeping software to handle the S Corp, specific bookkeeping. You got to find a CPA to, file your S Corp tax return and whatnot. So Collective is really convenient in that it consolidates all of that into one place. I have a freelance job and I have a business. My freelance job is currently paying me to my personal bank account. Should I switch it to them paying me to my business account? Yes, definitely. If you have a freelance job and you have a business, your freelance job should be paying your business account. It should. And when you say that you have a business, if that means that you have an LLC set up, then if you don't already, it's a good idea to set up a business bank account connected to the LLC. You go to a bank. You can a lot of times you can open one up online. They might ask for your EIN number, everything like that. But you should set up a business bank account for your LLC. Then after that, you should have your freelance jobs. All of that money should go into your business bank account. That just keeps accounting records clean. It keeps your business organized, and it just looks a lot better if you ever were audited or anything like that. And then once the money is in the business bank account, you can transfer it over to your personal account whenever you want to pay yourself and to give money to yourself personally. That's how I'd set that up. How will that affect my taxes if I want the money to go directly to me? Won't affect your taxes at all. If you're an LLC and you're getting paid by a freelance, it doesn't matter where that money gets deposited. It doesn't matter if it gets deposited in your personal account or your business account. The tax situation is the same. Depositing it into your business account just keeps things more organized and easier to do the accounting and easier to keep straight and organized. Do you offer an app that allows for time, mileage, and expense tracking? So in your Collective dashboard, that is a part of the platform to where you can record your mileage and expenses. So absolutely. How do you transfer from QuickBooks? Well, for one, to discuss that, I would encourage everyone to schedule a call with an advisor of Collective. You can go to collective.com. You can reach out to us on social media, send us a message, and you can schedule a call with a business advisor, and they'll go through your situation, see if Collective would be a good fit for you, talk through the process of transferring over from QuickBooks and everything like that. So I'd encourage you to schedule a call. I'd also encourage you to schedule a call because the S Corp deadline, to make an S Corp election, for LLCs is March 17th this year or March 15th, one of the two. It's either March 15th or March 17th. And it's important to get that S Corp election in by the middle of March, by that deadline. So if you're an LLC and you think that you might benefit from an S Corp, I'd schedule a call as soon as possible. All righty, moving on right along here. How can I do my bookkeeping if I'm a novice? Well, honestly, what I would do, for one, I would join Collective, and obviously, and if you're making at or above $60,000 a year, then it might be beneficial for you to join Collective. And the reason I say that is when someone is making around 60 grand and they go the S Corp route, you're saving a few $1,000s. You're, on average, you're in a situation like that, you're probably saving between $5,000 and $6,000 on taxes with an S Corp. Those are very general numbers. Some people it'll be much lower. Some people it might be a little higher. But generally, you could expect to save that much. That amount of money covers Collective's fee, and then some. It covers our entire fee to handle your entire business tax situation, and you save some money on top of that as well. So $60,000 is kind of the sweet spot to go the S Corp route. But if you're making at least $60,000, and if you're a novice at your bookkeeping, I would just join Collective. You should save more money than what it would cost you, and we'll handle your bookkeeping, so you won't have to worry about it. What can I do to ensure that I'm paying myself correctly as an S Corp? It's a really good question, and I think it's a question that a lot of people ask. First of all, let's talk about S Corps a little bit. The benefits of an S Corp is that it could save you in the self-employment tax. Before you become an S Corp, when you're just a sole proprietorship or an LLC or kind of at that stage, you pay the maximum amount of self-employment tax. And usually either all of your money is subject to it or a big chunk of your money is subject to it. And self-employment tax is a flat tax rate of 15.3%. So let's say that you're just an LLC and you're making 100 grand a year, somewhere around there. Before you become an S Corp, how you calculate your self-employment tax is you take 100 grand and you multiply it by 15.3%. What happens with an S Corp election, though, is really what it does is it creates kind of like an employee-employer relationship between you and your own business. You essentially become employed by your own business. You become a W-2 employee of your own operation. And since you're an employee, you will pay yourself a salary. The S Corp will pay you a W-2 salary, just like you'd make if you work for someone else, as a W-2 employee. But the cool thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So let's say, given the earlier example, let's say that someone's making around 100 grand. But let's say with an S Corp, let's say that $40,000 a year is a reasonable salary, something like that. And if you came on board with Collective, we would give you a salary recommendation. We'd pretty much tell you, what we think you should pay yourself, or what we would advise you to pay yourself. But generally speaking, if someone's making around 100 grand, a $40,000 salary is pretty common, somewhere around there. With an S Corp, that first 40 grand is still subject to the self-employment tax. You still pay it. The other 60 grand, or just the rest of your money outside of your salary, those are distributions to yourself. Okay? That's just business profit. That's kind of like a return on profit from your business. And long story short, that chunk of your money is no longer subject to the self-employment tax any longer. So, in a situation like that, someone's saving around $9,200 a year in the self-employment tax. And, if you do the math, that is close to, well, that is, 10, over 10% of someone's entire net income in that situation. So it's a big deal. And I'm sorry, it's not 10%. It's a little bit less than 10%, but still, it's a big chunk of your money for sure. Is there a way to completely avoid the self-employment tax? Well, I mean, usually not if you're in an active type business. Like if you're an active consultant or you own a business or whatnot, then no, usually it's not possible to completely avoid the self-employment tax. So no. But however, let's say that you own passive investments, like stocks, bonds, real estate, in certain situations. Most of that stuff isn't subject to the self-employment tax, the 15.3%, because it's passive income, and passive income isn't subject to those taxes in general. So that's a way to completely avoid it, is to have income sources that come from passive sources, passive income. Alrighty. What professions benefit the most from becoming an S corp? Really, a good profession, a prime profession for someone that to go S corp is the service-based profession. Someone making between $60,000 and probably like $300,000, something like that, and provides a service. So like a consultant, marketing professional, online creator, just a service-based professional in general. Those are the prime people that really benefit from an S corp. Oh, interesting. Here's a good question. How was an S corp entity created, and why was it created? Well, this is my opinion on why is it created. I think this is what I think happened. At the turn, what's the phrase? At the turn of the century, I'm not really sure. Recently, in the last 50 years or so, we invented the internet. Or not we, smart people invented the internet. People way smarter than me invented the internet. And it gave the ability for people to quit their jobs and start their own businesses. So entrepreneurship just became more common for people to quit their jobs and start their own businesses. What people noticed, though, is when they quit their job, and let's say they were making $80,000 a year, something like that. What they noticed is when they quit their job, became self-employed, and made the same amount of money as what they were making as a W-2 salary. Let's say that someone's making 80 grand, just like they had when they had a job. They noticed that their tax bill was more than they were self-employed. Same amount of income, but they're paying more in taxes. It doesn't make any sense to them. Like, how is that fair? And the reason that is because the self-employment tax, the 15.3%, all that is Social Security and Medicare taxes. That's literally what the 15.3% is. So when you work for somebody else, you still pay the self-employment tax because you pay the Social Security and Medicare tax. It's even the same tax rate. It's 15.3%. But the difference is when you have a W-2 job, is your employer pays half of those taxes for you. Just by law, they have to pay half of those taxes. When you're self-employed, you're the employer. you're employing yourself. So there is no other employer to pay half of that self-employment tax for you or half of the Social Security Medicare tax for you. So you're subject to the full 15.3% simply by being self-employed. So what people did was they went to Congress and they said, this isn't fair. They lobbied Congress and they said, it's not fair that I have these burdensome taxes when I'm, hustling and starting my own business. Like, you should give me a break. So they created the S Corp election. And the S Corp election just kind of assumes that you're not some, big corporation that has a, suite of executives. You don't need this big corporate structure. You still need a pass-through structure to save on the self-employment tax and to optimize it. And thankfully, the government put that into place, and the S Corp is part of the tax code. It's something to where if it's beneficial, you should use it. What is the idea with Collective's retroactive S Corp election? How can we take advantage and how does it work? Very good question. It's a really important question. The retroactive S Corp election is something you need to do by March 15th of this year. There's a deadline that 75 days after the start of the year, if you've got an LLC, you have a deadline to make the S Corp election. This year, I actually believe it's March 17th, but just for clean organizational purposes, let's assume it's March 15th. Usually the date is March 15th of every year that you have to elect S Corp status before you can. After that, it's late, and that's not as optimal. So what you'd need to do is just join Collective before March 15th so we can get that S Corp election into the government. And what that'll do is that'll be a timely S Corp election. That's the most optimal situation. And what's going on now is Collective is we're running a big promotion due to that. And if you sign up by that date, they'll waive your setup fee and will waive your first month. So it's something I take advantage of, and I would schedule a call with a business advisor as soon as you can and talk it through. Okay, I can tell someone's asking a question. How important is it to get all of your deductions for tax season? It's very important because your deductions and things you can write off and things like that can have a big impact on your tax bill. And so, for example, there's situations to where you can write off health insurance as a business expense. If you provide your own health insurance to yourself and whatnot, a lot of situations you can write that off as an expense. So that's a big deduction that can benefit your tax bill. There's some self-employed retirement accounts that allow you to, allow the business to write off those deductions as a straight write-off, so you save on taxes and whatnot. So deductions are extremely important. I mean, because it could be the difference of having a $30,000 tax bill and having a $2,000 tax bill. It's a big deal. With the IRS going through a lot of changes, does that make for an easier tax season? Well, it kind of depends, to be honest with you, because what they're doing right now is they're actually cutting the IRS. Like they're cutting a lot of the people from the self-employed collection division. So the collection of back taxes and stuff might slow down, but I'm hoping that the customer service won't slow down. I'm hoping that they don't, lay a lot of people off that are involved in customer service, because that could make for a challenging tax season. It really could. And I have no opinion on, budgets and things like that. Like, people have a lot of, varied opinions on that, and I'm not an expert in that. Just to be clear. But it kind of depends on if the changes will make for an easier tax season or not. If they're able to, modernize and get technology in there and, really, improve the IRS website, improve some of the automation, then maybe, we'll have a lot better tax season than we think. So who knows? Like, we'll see what happens, and I'm hoping for the best. If I run a business and have a full-time job, what's my best scenario for this tax season? Well, the good news is that if you have a full-time job, you're already paying taxes out of your paycheck. And if you usually get a refund, from your W-2 employment, that money will be applied to your business taxes. So, if you haven't been paying your estimated tax deposits or, something like that, that could save you. So that's kind of the best scenario is that, if you pay enough taxes through your W-2 withholding to where you don't have to worry about late payments to the IRS for the business and, things like that. How important is it that payments I get from freelance goes into my business account? Well, I mean, in my opinion, it's pretty important just because I'm a tax guy. And I think it's a good idea just to keep things organized and easily traceable and, easy enough to give to banks, if you're ever applying for loans and stuff like that. That's why it's a good idea to kind of keep it separate. But if you do have stuff deposited into your personal account, if you're just an LLC or a sole proprietorship, it's not a huge deal. It's fixable. It's not a big deal. So don't fret over it. But that's all the time that I have left today. I actually have to go and speak to some collective members. But it was a pleasure. And I would encourage you, the March 17th deadline is coming up, for the Retro S election. I would schedule a call as soon as you can and, to get that figured out. And we're looking forward to speaking with you.